Weekend all. Ira Epstein with your weekend edition of your agriculture wrap-up. And this is for Friday, and we are now at the 22nd of November, 2019. Hard to believe we're November 22nd. Pretty soon I won't be saying 2019. Well, as you can see in the market, you close down on the beans, up in the wheat. So wheat market has been giving a different story than the corn and the beans, which act like they're under selling pressure in the marketplace. If you take a look, the stock market, mixed bag here, but at this hour, and we're really at 1:40 in the afternoon, you're just sitting here with the stock market up a little bit, the metal market's down, the market is still wondering what is going on with trade, and to bring you up with that, well, the House and the Senate, the U.S. House and Senate, have passed bills condemning Hong Kong. The president has so far decided not to do anything. It's just sitting on his desk. It's a form of a veto. And the president doesn't have to actually say anything. His not doing anything puts him in a position with China where they see the reluctance of him to sign that, and he'll get points for that one way or the other. I'm sure the Chinese understand that the longer this drags out, especially as we get further along, not only do you have a Trump problem, you might have a Democratic problem if they win, because they're not the friendliest on this trade deal either. So maybe it's now time to get phase one wrapped up for everybody's best sake. As we look at the monthly chart of beans, you can see how the market's been rolling back down towards that 18-month moving average. Now, that number is 878.5. We're at 897 at the close. On a weekly chart, you can see how the market's been slipping back from these highs. For the month, as you can see, we're down, actually for the week, I should say. For the week, we're down 21 cents, and the pattern is one of lower highs, lower lows. The 18-week moving average of closes is at 890. I'd be surprised if the market doesn't try to hold that number. The marketplace has spent now, if we really think about it, 3 of the past 4 weeks hitting in some manner the 100-week moving average of closes. So I'm going to say this. The trend is down because you have a pattern of lower highs and lower lows on the weekly chart. The bias is up because the market is over the 18-week average. What stopped the rally were the challenges over this 3-week period, 4-week period here of hitting the upper Bollinger Band. Remember what a Bollinger Band is. It's an algorithm designed to keep the market trading within it 95% of the time. So getting up to it or going down to it is often an area where support and resistance first shows up. And then you're wondering, can a market carry itself? Well, what this market has done is when the market went up to these numbers here, your momentum was pointing up as you got up to it, and then the market started rolling with the momentum. And what the market has now done is the momentum has now actually turned down. So we have momentum down, bias up, and the swing line down. Again, battleground 890, I think. Meal market. In the meal market, this week's low of 289.40 up to 98.40 took out 298.50. So now you've got a market where if I look at this week's high, it is 307.90. And if I come all the way back here, that high was 311.90. Now, I could argue that instead of me having an up arrow, I could take this one and point it down. And that's probably the right thing to do in looking at it again. It wouldn't matter because even if the trend with lower highs, you got higher lows. Do you see that? So that's all it would do. It's not doing me a heck of a lot of good. Get a close under 298 and it does, then I'm going to argue lower highs, lower lows, the way that I deal with that. Soy oil is the best holding of the bean complex. And the market is, number one, momentum-wise, gone flat on you. Price-wise, you can see how the market's now gone flat in all that. Are we trending? No. You have a pattern of a higher high and a lower low. The bias is certainly up because you're over the 18-week average. And if we look at the 18-week average of closes, this week's the first week. It had a crossover, a bullish crossover. You haven't seen that in a very long time. I think that's a telling story going down the road, that internally this market is acting more bullish than the beans or the meal market. In the corn market, you are still in a downtrend. You have a pattern of lower highs, you have lower lows in place, momentum is flat, bias is down, resistance between 375 and 3/4, 378 and a quarter. You'd have to get up over 402 and a half to break this particular pattern. I still see the market with pressure on it. In the wheat market, wheat is trying right now, it got up today to 519 and a half, didn't take out 521 and 3/4. That leaves the pattern of lower highs. If we look at the lows of this week, 498 and a half, they took out those lows. So we have lower highs, lower lows, but as the market's making a run at the 18 and the 100-day averages, all of a sudden it's finding support within itself. And this is an outside week up. So if the low of this week's taken out, then I think you're pretty much a market that wants to get down to that number. If the market takes out 521 and 3/4, it is telling you it's out of a trend. It would then have a lower low, higher high, you break the trend in the market. And the trend even down on the swing line still has upside bias. Cocoa, first challenge of the upper Bollinger Band. You didn't hit it here, you hit it last week, and the market soared, finishing up 263 points. This week you gave back 100, and notice that the settlement at 26.66 is under that upper Bollinger Band. So we got a little rich in price. The pattern is also one of a lower low, higher high. So the overall bias is up, the price objective hit, momentum is flattened out on you as the market got up there. In the sugar market, the trend is still up. You have a pattern of higher lows. You've got your higher highs in the marketplace. I see resistance at 1321. I see support between 1227 and 1193. The last break low was 1205, so the best number for the market to hold is not get through that, so I'd be passing on the idea of the 18-week average, and I'd call the 1227 a better support zone, because traders like to see patterns that make sense. In uptrends, higher highs, higher lows, downtrend, lower highs, lower lows. When those patterns get broken, you seem to get traders that are moving average bias moving away from them. Coffee market, uptrend, higher lows, higher highs. The interesting part was on the daily chart, when you had lost an embedded reading on the dailies. My goal was to get back to that 18-day average. That made the low of the week, and the market soared from there, finishing off very strong, 845 points higher, probably ahead of itself. It's the first time over the upper Bollinger Band in quite a while, so I'd be a bit cautious on that. Wouldn't be surprised if we try to pull back, but you don't stand in front of a freight train. This market just took off on everyone. In the cotton market, it's been a grind over the past couple of weeks, 4 of them almost, to get down and start challenging the 18-week average of closes. That number, 61.72. This week's low, 61.73. So I'm going to call the market neutral right here, as you have the swing line down, but the bias still closed with the market over the 18-week average of closes. Momentum, well, it's on the verge of turning down, so you've got to pay attention to it. But where it's turning down is right into what I call that line in the sand, that 18-week average of closes. Cattle market, momentum is still up. And remember, on weekly charts, we don't look to see overbought or oversold. Momentum is either up, down, or going sideways. This is still out-defined as being in an up. The pattern, higher lows, higher highs, still strong. If you were to break down from here, first support's 11500, let's call it the 100-week average. Then way back down here in the 108s, it's going to be the 18-week average. In the hog market, still bearish. And you would think, boy, if people were worrying, were they going to buy hogs from China? Nothing yet. Lower highs, lower lows, bearish. Bias down, bearish. Back here, I pointed this out to you, right the week after this was November 8th, the 15th. You got the 18-week under the 100, and you're getting follow-through off that bearish crossover. If this market wanted to totally let go, another 9 cents lower, wherever the lower Bollinger Band is, could come into play. I don't know if it's got that kind of power in it or not, but it's certainly something I'd be watching. And let me explain what I do in the mornings to get you going. Each morning, by 6 a.m., I am recording a 20-minute video for my subscribers. I am specific as can be because I'm trying to work with you on your trade selections. You may have ideas. It could be in the grain market, the meat market, the sugar, the coffee. I don't know what you're guessing yourself on, but I'm going to walk you through each chart as though you were sitting exactly next to me and point out what I'm seeing in those charts and where you go with them. So the idea is to get your morning off with my trade ideas, see if they fit in with your own, and away you go. Am I going to have an idea on every market every day? Yeah. I'm either going to be bullish, bearish, or neutral. And if you know me, I'm not bashful. I'm going to tell you just what I see in the market. You're going to get points of entry and exit. Obviously, a stop and a profit objective are going to be offered to you. And a point of entry, I'm going to be very specific. What do you need for that extra bit of confidence? Well, I'm going to be telling you what I've just seen in Europe. I'm going to tell you what I'm already seeing out of Asia, both ways of that. U.S. openings, the reports of the day, where are they? I don't care if it's grains or any of the others. I'm covering it for you in detail. And that's how we start off. And then we're going to cover in this exact sequence all these markets. The charts will be black just like that. So the idea here is to start your day off with a better idea, or an idea that, maybe the word better isn't the right one. Let me correct that. An idea. You may have a heck of a better idea than I do. And how do you get this? Well, if you haven't tried it, there's an introductory offer, $7.95 for 30 days, 26.5 cents a day, and no, you're not committed to keep going forward or any of that. You can either call my staff, they'll set you up. If you go to our website, under Ira's Market Research, you'll see top right there. Just go to our page, you'll see research. It explains all the different plans that we have. You can click up here to get there as well. If you're watching me on YouTube, hit that icon. It'll take you right there. I'm Ira. You have a great day. Have a good weekend. Take care.